Alright, let's talk about something that might sound intimidating, complex, but it can actually be a smart move for your future, a living trust. We all know we can't take our assets with us at the end. Then what happens to everything that you built? Your business, your asset, your bank account, your investment account when you're gone. Hi, I'm Matt Ahn, EA with Ahn Company. Today, we're talking about basics of a living trust. If you built a successful business or invested in real estate, it might be time to pay attention for building wealth and protecting your assets and family. I'm making this video to share some fundamentals that might resonate with you and honestly to remind myself too. Let's dive in. First, what is a living trust? A living trust is a legal arrangement that holds and manages your assets while you're alive. When you pass, those assets are distributed to your beneficiaries without going through a probate, which is a very expensive and takes a long time. If you have a real estate in multiple states, for example, and there's no living trust, that means your kids would have to probate in every single state. Many people think living trusts are just for the wealthy people, but that's just not true. If you started building wealth, I believe it's worth considering. Here's why people use a living trust. It avoids probate. No court, no delays, and no fees. It keeps your affairs private. Trusts are not public records. And it keeps things moving. If something happens to you, your family can access to what they need faster, and it prevents chaos. Again, if something happens to you, if someone you trust steps in and manages your assets as outlined before, no court battles. So a living trust is about control, protection, and peace of mind. A will is different than a trust. A will only goes into effect after you pass, while a living trust works while you're alive and after you pass. A will goes through probate, while a trust avoids probate. Wills are public records, unlike trust. Most people should have both a trust to protect assets and a will to cover anything outside the trust, like a guardianship. Next, let's talk about tax and estate planning. Living trust is revocable, which means it's flexible. There are no tax consequences if assets appreciate inside the trust. If you rent a property inside the trust increases its value by 100K, for example, you don't pay tax until you sell, then you pay capital gains when you sell. Then what happens when you pass away? Your beneficiaries get a step up in basis on the appreciated asset. For instance, let's say you bought a rental property for 300K and it's worth 500K when you pass. That rental property is in your living trust. Your heirs' new cost basis will be 500K. They sell it right away, they have zero capital gain. This is a huge tax advantage, especially for real estate. I'm on EA, specialized in small business and real estate taxes. You want to make sure you're not overpaying taxes or missing out on long-term strategies. Schedule your free tax discovery call with me today. We'll make sure you save more with confidence. The links in the description below. Moving on, here are some examples of what you can transfer into a trust, real estate, bank account, investment account, business interest, and life insurance. So whether you are a homeowner, a parent with children, a real estate investor, business owner, and you like to avoid probate and protect your assets, a living trust is something you should consider. Lastly, here are my thoughts. You don't need to be a millionaire to benefit from a living trust. I believe it's all about timing. The earlier you plan, the more you preserve. So you can build wealth, protect it, and pass it on the right way. Okay, that was all I have for today's topic. If you have any questions around your taxes, feel free to reach out. I have my contact info in the description below. If you find this video interesting, please like and subscribe. Thanks for watching.